Everybody knows about IRCTC, but there are many railway stocks with low market cap and high potential. Today, we are going to discuss the top 8 railway stocks to invest for the long term. Indian railway stocks have reached new heights in 2023. One reason for this is that the government has allocated a record rupees 2.40 lakh crore for Indian railways in this year's budget. By 2050, it's expected that 40% of the world's rail activity will be in India. The railway sector is likely to see higher capital allocation in the Union Budget 2024-2025 as well, with the government's focus on revamping the railway assets and development of infrastructure. Launch of brand new Vande Bharat trains, redevelopment of railway stations and laying new railway tracks not only propelled growth but also fueled a bull run in railway shares. If you are new to my channel, please do subscribe. Also check out my playlist, Best Stocks to Buy for the Long Term. I will give you 5 reasons on why you should invest in railway stocks. The number 1 reason is consistent income and dependable cash flows. The second reason is government support and subsidies. The third reason is long-term revenue growth. The fourth reason is sector growth. The railway sector has demonstrated positive growth over the years, overcoming challenges and outperforming itself. The fifth reason is modernization efforts from the sector. The railway sector's size and its connection to various businesses make it an integral part of the economy. Recent transformations and modernization efforts, such as the introduction of high-speed trains and indigenously designed Vande Bharat Express and improved travel experiences, which can positively impact the railway stocks. So let's get started. The first stock specializes in manufacturing vehicle bodies for commercial vehicles, railway freight wagons, and various components. This company boasts a diverse product portfolio, catering to a wide range of industries. I am talking about Jupiter Wagens Limited. What sets the company apart is its strong technical capabilities, particularly in wagon manufacturing. They have designed critical wagon parts in-house and are currently collaborating on developing high-speed braking systems with an overseas partner. This innovation keeps them at the forefront of the industry. From shipping containers and skip loaders to troop carrier vehicle bodies and water bowser bodies, their offerings span across mining, road construction, solid waste management, municipal applications, and defense. Looking at the revenue breakdown, commercial vehicle load bodies components accounted for 43%, railway wagons took up 55%, heavy fabrication constituted 1%, and others made up the remaining 1%. The company's clientele includes major players like Tata Motors, the commercial vehicles, Ministry of Defence, and more. Over 70% of revenue is generated from Indian Railways. In recent news, the Ministry of Railways has awarded an order to the company for manufacture and supply of 4,000 numbers of box wagons for a contract value of Rs 1,617 crores. The railway is coming with a new 50,000 to 55,000 wagons tender, which they require in 18 months. Jupiter Wagens holds 25% market share in wagon manufacture and to benefit highly. They are also planning to enter the EV truck market. Jupiter Wagens, with a market capitalization of 13,305 crores, operates with a current stock price of 323 rupees. Price to earning ratio is 58.35, higher than its sector pay ratio of 36.25. Stock price rose to 153.58% and outperformed its sector by 202.38% in the past year. Debt-to-equity ratio of 0.36 is less than 1 and healthy. Return on equity for the last financial year was 15.03%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry. It is a good time to consider buying as the stock is not in the overbought zone. 50% by rating from analysts. The second stock is the main supplier of wagons to the Indian Railways. This stock is known for designing wagons catering to cement, coal, and chemical industries. This stock has given huge profits to investors in 2023. I am talking about Teex Meco Rail Engineering. The increase in demand created an excellent opportunity for the company to strengthen its manufacturing branch. The company operates into business segments, heavy engineering division and steel foundry division. It manufactures a diverse range of products, such as railway freight cars and hydromechanical equipment. Teex Meco is the leading and most reliable freight car maker over the past 7 decades. In fact, 1 out of every 4 freight cars on the Indian Railways network is rolled out from Teex Meco. Its freight cars serve a host of core industries like cement, steel, defense, fertilizer, oil, alumina, thermal power projects, chemical plants, etc. These include custom-built special-purpose freight cars for the movement of large, oversized consignments of individual weights up to 250 tons. Besides, the company is moving fast into the manufacture of double-deck auto rake in collaboration with a European company. The company has made significant thrust in overseas markets. Several awards bear testimony to its successful achievements in national and international projects financed by the World Bank, ADB, and other multilateral funding agencies. The steel foundry of the company is the largest in the country. In recent news, the company received an order to manufacture and supply 3,400 box wagons valued at Rs 1,374.41 crore from the Rail Ministry. Teex Meco, with a market capitalization of 6,628 crores, operates with a current stock price of 173 rupees. Price to earning ratio is 96.87, higher than its sector pay ratio of 36.71. Stock price rose 223.46% and outperformed its sector by 167.95% in the past year. Debt to equity ratio of 0.72 is less than 1 and healthy. Return on equity for the last financial year was 4.8%. The company is giving better long-term returns than the industry. It is a good time to consider buying as the stock is not in the overbought zone. The third stock provides auto parts for Vande Bharat Express. They have recently secured an order worth about 12,227 crore rupees from the Railways Ministry to supply 15.40 lakh forged wheels under the government's Atmanirbhar Bharat initiative. The contract spans over 20 years, with the delivery of 40,000 forged wheels in the first year, 60,000 in the second year, and 80,000 wheels annually thereafter. I am talking about Ramakrishna Forgings. They specialize in manufacturing and sale of forged components of automobiles, railway wagons, coaches, and engineering parts. Established as the second largest forging player in India, they have a strong client base including Tata Motors, Indian Railways, Bharat Benz, Volvo, and more. The company's revenue breakup showcases a diverse portfolio, with approximately 79% derived from the automotive sector, 21% from non-auto segments. Ramakrishna Forgings has secured its position through strategic acquisitions, including Zuyo Manufacturing, ASIL Limited, JMT Auto, and Multitech Auto Private Limited. These acquisitions have not only expanded the company's product offerings but also contributed to its ranking among key players in the forging industry. Ramakrishna Forgings, with a market capitalization of 13,092 crore rupees, operates with a current stock price of 724 rupees. Price to earning ratio is 45.12 and its sector pay ratio of 36.71. Stock price rose 188.78% and outperformed its sector by 104.41% in the past year. Debt to equity ratio of 0.99 is less than 1 and healthy. Return on equity for the last financial year was 18.77%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry. It is a good time to consider buying the stock as it is not in the overbought zone. 60% by rating from analysts. The fourth stock is known for building wagons for Vande Bharat Express. This company has delivered good profit growth of 24% over the last 5 years. This stock is mainly engaged in the manufacturing and selling of freight wagons, passenger coaches, metro trains, train electricals, steel castings, specialized equipments, bridges, ships, etc. I am talking about Titagar Rail Systems. I have already done a detailed analysis of this stock. Click the I button above to watch. Titagar Rail Systems, with a market capitalization of 14,108 crores, operates with a current stock price of 1,047 rupees. Price to earning ratio is 66, higher than its sector pay ratio of 36.71. Stock price rose 441.52% and outperformed its sector by 390.32% in the past year. Debt to equity ratio of 0.26 is less than 1 and healthy. Return on equity for the last financial year was 15%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry. It is a good time to consider buying the stock as it is not in the overbought zone. 100% by rating from analysts. The fifth stock is an integrated engineering and construction company. The company specializes in major infrastructure projects, spanning railways, highways, bridges, flyovers, tunnels, and more. The center has granted Navratna status to this state-owned firm. I am talking about Ercon International Limited. In the railway construction sector, they excel in new railway lines, rehabilitation conversion of existing lines, station buildings, bridges, tunnels, signaling, telecommunication, and railway electrification. Ercon stands out as the only Indian PSU and one of 5 Indian companies listed among the top 250 international contractors. It's recognized as a sectoral leader in transportation infrastructure, particularly in the execution of railway projects. Ercon's diverse services include project management consultancy, engineering, procurement construction, public-private partnership, and real estate. Ercon's revenue mix is primarily derived from the railway sector, 94%, followed by highways, 5%, and other sectors, 1%. With its headquarters in Saket, New Delhi, the company operates through 54 project offices and has a global footprint with offices in Sri Lanka, Bangladesh, Malaysia, South Africa, and Algeria. Ercon has successfully delivered 128 plus projects in 25 countries and over 401 projects in India. Some of its notable customers include BAIL, NTPC, and international entities like the Ministry of Transport, Government of Sri Lanka, and Bangladesh Railways. Ercon's growth is further fueled by its 11 subsidiary companies and 7 joint venture companies. The company has also entered into strategic alliances, including a joint venture with Cochin Port Authority for a proposed harbour project in a neighbouring country. Looking ahead, Ercon aims to expand its international portfolio, exploring new areas for business diversification, including renewable power. The company envisions transitioning from a construction-centric entity to a diversified company with a broad portfolio of contracts and projects. The International Chamber of Commerce, ICC, pronounced an award in favor of Ercon with respect to a matter of arbitration with Eskom Holdings stock. The stock has hit an all-time high. Ercon, with a market capitalization of 15,664 crore, operates with a current stock price of 166 rupees. Price-to-earning ratio is 17.70, lower than its sector pay ratio of 34.10. Stock price rose 166.93% and outperformed its sector by 117.51% in the past year. Debt-to-equity ratio of 0.29 is less than 1 and healthy. Return on equity for the last financial year was 15%. It is a good time to consider buying the stock as it is not in the overbought zone. 100% buy rating from analysts. The sixth stock is a public sector enterprise that has been a key player in the transport consultancy and engineering sector in India. This stock is the only export arm of Indian Railways for providing rolling stock overseas. From railways to highways, airports to ports, and even urban transport, this stock has diversified its services and expanded its geographical reach. I am talking about RAEL Limited. So this stock has been instrumental in shaping the transportation landscape not only in India but also globally. One of the key strengths of RAEL lies in its diversified services. The company engages in consultancy, engineering, and project management across various sectors, including railways, highways, airports, ports, ropeways, urban transport, and inland waterways. Additionally, the company offers third-party inspection, quality assurance, construction supervision, project management, leasing, export of rolling stock, and modernization of railway workshop projects. Let's take a closer look at the revenue split. The consultancy services accounted for 41%, leasing for 5%, other projects for 6%, export sale for a significant 36.28%, and power generation for 0.8%. RAEL has truly gone global, undertaking projects in over 55 countries across Asia, Africa, Latin America, South America, and the Middle East. While 90% of its business is in India domestically, RAEL has made significant strides in expanding its international presence, with 7% of its business coming from Africa and 3% from Asia. RAEL has an impressive clientele that includes prestigious institutions and organizations such as IIM Rohtak, JNU, Delhi University, AIIMS, BPCL, SAIL, NTPC, and many more. The company's diverse portfolio and extensive experience have earned the trust of various industries and sectors. In 2022, the company secured around 50 projects, including its highest-ever order for railway track works from the Ministry of Railways. RAEL has strategically diversified its operations through strategic subsidiaries and joint ventures. From RAMC Ltd handling power procurement for Indian Railways to its Wagon manufacturing joint venture SABL. Last month, RITES secured partnerships with Oil India for the design of a new smart city program in Assam. RITES, with a market capitalization of 12,391 crores, operates with a current stock price of 518 rupees. Price to earning ratio is 25.74, lower than its sector pay ratio of 34.36. Stock price rose 48.27% and underperformed its sector by 4.39% in the past year. The company is debt-free. Return on equity for the last financial year was 18%. It is a good time to consider buying as the stock is not in the overbought zone. 60% by rating from analysts. The 7 stock holds 68.52% market share in cargo carrier services. I am talking about the Container Corporation of India. This stock is a holding company specializing in logistics and transportation services. Operating through 2 key segments, EXIM and domestic, Concor is at the forefront of handling, transporting, and warehousing activities. RAEL is the backbone of Concor's transportation strategy, with the majority of terminals rail-linked. Whether it's warehousing, container parking, or repair facilities, Concor's terminals provide a spectrum of services. As a container freight station operator, they add significant value to the logistics chain, offering services like transit warehousing, bonded warehousing, ALCL consolidation, and more. Concor boasts a 77% market share in the domestic business and 65% in the EXIM segment. The terminal network is robust, with 60 terminals. From enhancing international presence to investing in IT initiatives, Concor is paving the way for efficient logistics support. Container Corporation, with a market capitalization of 50,766 crores, operates with a current stock price of 832 rupees. Price to earning ratio is 42.79, higher than its sector pay ratio of 37.57. Stock price rose 11.02% and underperformed its sector by 8.68% in the past year. Debt to equity ratio of 0. Return on equity for the last financial year was 10.45%. The company is generating increasing cash from operations. It is a good time to consider buying the stock as it is not in the overbought zone. 52% by rating from analysts. The 8th stock is the largest telecom infrastructure provider in India. This stock has been a key player in transforming India's communication landscape since its inception in the year 2000. They provide broadband and VPN services along with telecom IT infrastructure consultancy services. I am talking about RailTel Corporation of India Limited. This company was incorporated with a mission to create a nationwide broadband and VPN services network, modernizing train control operations and safety systems of the Indian Railways. RailTel offers a diverse range of services across various industries. From enterprise-class video conferencing to retail broadband through RailWire, they are connecting the nation in more ways. So what sets RailTel apart? It's the only consistently profitable, consistently dividend-paying, and debt-free telecom company under the Government of India. The company's revenue mix was diverse. Approximately 60% came from telecom services, including ANLD and ISP services, while projects contributed the remaining 40%. This includes railway project works and other projects. The company has undertaken key projects like the National Optical Fiber Network, telecom and IT services-related projects, and enterprise-specific ITS projects. With significant orders from Indian Railways, Coal India Limited, Ordnance Factory Board, and Indian Air Force, RailTel is a key player in system integration and bandwidth requirements. From the More Excellence Award to the Best Carrier of the Carrier Award, RailTel has consistently been recognized for its innovative and impactful contributions. RailTel, with a market capitalization of 10,102 crore, operates with a current stock price of 306 rupees. Price to earning ratio is 47, lower than its sector pay ratio of 49. Stock price rose 129.02% and outperformed its sector by 105.21% in the past year. The company is debt-free. Return on equity, ROE, for the last financial year was 10.89%. It is a good time to consider buying the stock as it is not in the overbought zone. Remember, always conduct thorough research before making investment decisions. I hope you found this video informative, and subscribe to our channel for more informative videos.